Welcome to another episode of Money Matters here only on onedealaway.com/live. Boy, am I excited for this week and for what we're about to cover. It's been a fantastic weekend. I hope you all have had a wonderful weekend. A lot of celebrations all over the world for different reasons, but hey, who cares? Is celebrating and going outside is really fun. However, going outside can be potentially kind of scary as well, as the news reports are going to show, because I have all kinds of things that we're going to cover, anywhere to what's happening with the Dow Futures. Is it going up? Is it going down? What's going on in the Russia? Are they keeping dollars, dumping dollars, minting more gold? What's going on with gold? And there's all kinds of good news when it comes to Germany and Singapore. And so we're going to be traveling around the world this morning, covering all kinds of topics when it comes to money, business, investing, finance, and of course, ways for you to actually benefit from it. So let's do this. All right. So here we go. This is uh, quite a bit of interesting news that are going to be happening. So here we go. Here we are at CNBC. Dow Futures surged more than 500 points on a hope of a vaccine. The interesting piece is that I checked this article out last night. It popped up more or less the same thing. It was around like 11 o'clock New York time. And it says Dow futures jumped 200% on the hopes of the vaccine. So, and it was like, so it was published around 10:30 because it was about 39 minutes ago or something like that. So this morning, I was like, let me refresh this thing. Let's see what ends up happening. And all of a sudden, of course, it changed from 200 to 500, and it was written an hour ago. So I kept rubbing my eyes. I'm thinking, maybe I'm not awake enough. Maybe I'm not paying attention. But, anyways, so there you go. So this is what's going on with the futures. I've already shown you before how you can get into the futures, how you can evaluate of what's going on. Why they did it, why they didn't do it, who knows? I just want to know that it has jumped up in the futures, and while not always correlated 100%, there is a good potential that when we see the Dow futures go up, that the opening goes up, that the day is positive. When we see it go down, we see it sort of go down in the real world, or in the market that everybody participates in and watches. So just something for you to think through and think about, that when you want to sort of, I don't want to call it front run it, because it's not like exactly. What you could do is go out and buy just about anything and front run the Fed, because they already promised they're going to be buying everything under the sun. And who cares? Business not working? Never mind. We'll give them money. They're bleeding all over the place with the money because they over leveraged. Never mind. We'll give them money. I kind of wish that the government would give money to the people who have done that to themselves and small businesses, but no, that's reserved for public companies, for big businesses, and that kind of stuff. And, that's the part that I have an issue with. I don't have an issue with them printing money. I don't have an issue with them giving. But if you're going to give, give everybody. If you're going to forgive loans to the big businesses, forgive it to the little guy as well. I'm just saying. So, anyways, I do expect that at some point they're going to run into such a hot mess, y'all. They're not going to be able to do much of anything except basically, turn the money over to people and basically say, you know what, we're just going to have a debt jubilee. Everybody starts from beginning. Everybody starts from scratch. We're just going to wipe everything off, erase it, as they say, paint over it, and let's start. And the reason I say that is that there's no way that they're going to be able to keep up running this stuff, right? With the unemployment ridiculously high, then you have, like, printing of the money left, right, side, and center. Stock market going like ridiculously crazy, but the economy going down in the slumps. You have just so many things that are wrong right now, right this very moment. It's not even funny. It's not even funny. And so I do believe, I do expect that there's going to be some much larger reforms when it comes to our money. They were talking about sending another sort of $1,200 check, which is lovely, but it's not going to do much of anything. Now they're talking about, having the almost like a UBI, right? Like where they were like, oh, we're just going to give like X amount of money to everybody and we got to call it a day, which has a much better potential of kind of doing something for people because they need it so that people can go and spend. But, one thing that they're forgetting is that so many people, so many small businesses are over leveraged that you can't even go and spend it. That you can't even go. So even when you get the money, what did people do in the last one? What did reports say? Well, they said that they were saving it, they were paying down the debt. Most people were not spending it. I mean, few here and there were spending it, but most people weren't even spending it. Everybody was using it to deleverage, to save up. Some people put it in the investment. I don't know what they invested, but that wasn't discussed. So those are all things that people are doing, and I think if another round was to come in, people would probably do the same thing. I have a hard time seeing somebody, jumping on the airplane. I mean, I told you yesterday, people are petrified. They wear masks when they like open their windows and drive their own cars. Now, of course, there are other places in the world where that's not the case, but there we go. All right, let's continue because I could talk forever about my opinions, but that's not what we hear, or are we? Hmm. Talking about my opinion and being here. Make sure if you're not here today, make sure you join me tomorrow at 7 a.m. on onedealaway.com/live. You get to watch before everybody else does. If we look at the markets just like this, and you get to learn about what's going on in the futures market and how you can take advantage of it. By the time the market opens, you are ahead of everybody else, right? So you've done the homework. All right. So how are the markets? Well, obviously nothing has changed since we talked about the other day. But I wanted to share some of the more popular stocks. As you can see, Apple seems to be quite popular. Um, you know, let's see, Apple, Google, Microsoft. So that's tech. Citigroup, that's sort of financial services, and General Electric. I don't even know what General Electric does anymore. They used to be a manufacturer of like consumer goods and stuff, and now I feel like they're like all over the place. So, anyways, 10-year yield down, oil up, yen down, euro up, gold down. Here we go, world markets. It looks like green across the board. So Hong Kong, Germany, London, Japan, all doing rather swell. Japan is actually doing better than everybody else. And out of all of them, Germany, as you can see, is doing the worst. So I think it's going to be a green day. And if you're here at 7 a.m. watching this live, who knows? You could have gone in and made some money. Now, this is not a financial advice, but no means most of it is meant for education, potentially some entertainment along the way. All right. So sector performance, as you can see, retail trade has gone up, technology services up, everything else is down. Oh, hey, Charles. So Charlie decided to join us. This is Charlie, the mascot. So want to say hi? No, that's as good as it gets. All right. So he just likes to sit here and make sure I'm doing my job. All right. So what's going on with Russia and the dollar? Look, there's all kinds of Cold Wars going on right now. It's not even funny. I don't know if y'all noticed or not, but there's the whole like war between US and China, US and Russia, Iran. Uh, Now we're like picking on Brazil. I don't know if we're picking on them, but we're not allowing any flights and stuff. So it's been very interesting to see things develop, and as much as I talk about, there's all of these fights, feuds in Europe between the North and the South. We see it in the United States where just about everybody. We see all over the place where people are just not trusting people, not trusting countries. Like I said, there's something weird going on, something strange in the air. Just don't trust it. But, there we go. All right, dump the dollar. Russia has now gotten rid of over 96% of its U.S. debt holdings. 96%, y'all. That's an insane amount. An insane amount for the country. And this was early in May, but we just didn't cover it. We didn't have time to cover it, so I figured it's important to go and cover stuff. So Moscow has continued to sell off U.S. Treasury securities, cutting its stockpile by 8.73 billion in March. And that was just in March, but then they did it more in the form of, so 8.7 billion in March, but they've been having it, so they liquidated the vast majority of everything. But the question that comes in of what is Russia doing? Oh, Russia is ramping up gold production. Interesting, right? So gold output in Russia continues to grow, increasing by 9.26% in 2019 year on year, the country's Ministry of Finance said on Monday. This was published 11 hours ago, so it's pretty fresh off the press. The volume of bullion production reached, oh, okay. I was going to say, why did they put, that's because it's European. So in the United States, you put a dot, and Europe, you put a comma. And it always shocks me. The volume of bullion production reached 343 tons compared to 314 in 2018. Production for a period included over 286 tons of mined gold, the ministry reported. So it's very interesting. Russia has been mad on gold. And there's other countries that are also reporting going on gold, but that's not it. Guess who else is hot on gold? The rich people. Look at this, right? So the world super rich are holding physical gold in secret bunker. So you can call it secret bunker all you want, but they are getting into the stuff, and they're not even getting into the paper asset. There's a case for owning gold, and they're saying that there's a strong uh, case for owning physical gold. And the data from Goldman Research showed that owning the physical metal seems to be global's lead preferred way to hedge against tail events. Which, yeah, makes perfect sense. You don't want to do it in paper because paper stuff, it doesn't really matter. Look at this. Let's read this together. Since the end of 2016, the implied build on non-transparent gold investment has been much larger than build invisible gold ETFs. So it doesn't even matter. Visible, invisible, it's freaking ETF. You don't want to do it. You don't want to do it. You don't want to go into the paper version. You want to go into the physical stuff and physical only. All right. Now, since we are across the pond, as they say it over here in the United States, let's go and look at UK. So, Bailout Brittany. The reason I'm actually doing some of these things and quickly covering them is because, sometimes it's really hard when you are stuck in one country, and you only see what's going on in that particular country. Now you're thinking like, well, they're the only ones doing that stuff. So I want to show you that United States is not the only country that is printing mad money. We cover it really well. We talk about it quite a bit, mostly because dollar is the world reserve currency, and it is coming from U.S. Uh, that's the reason why a lot of things cover it, but it's not the only country that is doing that stuff. Please understand. Everybody is doing it. Everybody's printing. Everybody's borrowing. Those that can print, they print. Those that can borrow, they borrow. And those that can mine gold, well, they mine gold and maybe dig some oil. I hear oil is back on up and talks about production going back up. So it should be interesting. And, it will definitely be an interesting play for a short while. Okay. So what's going on in the Britain? Well, they want to create a rescue plan for strategically important firms. All right, Charles, you are blocking my coffee, man. Go. Um, so what's going on? There's a bailout plan for key companies whose failure would be detrimental to economy. There used to be this saying that you owe a bank $1 million, you have a problem. You owe bank $1 billion, the bank has a problem. Very similarly, if you are a small to mid-sized company or just an individual and something goes wrong with the economy, you definitely have a problem. But if you are a large company whose key company whose failure would be detrimental to the economy, uh, the country has a problem. So clearly, our goal is to borrow more and get bigger. And when I say bigger, I don't mean like physically bigger because we're sitting in our houses stuffing our faces. I'm talking financially and politically bigger and more important. And I think that that's a key component for all of us to take on with us to say, I need to improve of how I'm doing with my money to become a sovereign individual so that no matter what happens, they print money, they don't print money, economy is good, economy is not good. I am doing just fine. So you want to learn from these things, and the best way to learn is get up early, spend a little bit of time learning, which is what we're doing over here. So, thanks for joining and learning and watching. So, British Finance Minister has authorized a bailout plan to rescue companies that are seen as strategically important, with the Treasury saying it may step in to support crucial businesses on a last resort basis after their options run out. So, this is the part that I wanted to share with you that this is happening all over the place. And then the UK is saying that the economic contraction was faster and deeper than anything we've ever seen in the past century, probably ever several centuries. Well, of course, the British have actually said that they're expecting the downturn to be worse than the last 300 years. That's 3 centuries, y'all. 3 centuries. So, like, my great grandfathers and mothers like haven't seen the crud that we're about to see, and they were used to quite a bit of crud back there, so if you really think about it. So anyways, under the plan, which is named Project Birch, the finance minister has enhanced the UK treasury capacity to bail out viable companies which have exhausted all options, so including governmental loan schemes. The government Financial Times paper responded. So here you go. There you go. That's kind of what's going on. The UK will issue 180 billion pounds or $222 billion of government debt between May and July. That's quite a bit of money, but the US has printed what, like $6 trillion in 2 months period. So, at this point, who's counting? Who's counting? It's just a few extra zeros. Uh, the country's debt mountain exceeds 2.3 trillion, and its public sector next borrowing could reach 14% of gross domestic product this year. My gosh, I need to drink more coffee and wake up because I can't read today. Now, yesterday we covered how India is warming up its hands, saying, "Ooh, China's getting out of business. We are getting in." Well, guess what? uh, Mexico's doing the same thing. They were like, China's out, we're in. Hello, world. So, what I'm saying is, there's no love in this world at all, at all, at all. Everything is about competition, cutthroats, people going in, and it's very, very interesting to watch what's going on around the world. And, it's sort of like watching kids play, and they all have a favorite toy. And, one kid is potentially maybe a little bit bigger, so he holds on and plays with the toy. But then the kiddo has to get up to go to his bathroom, and the other kids are like, forget it, man. We're taking the toy and running with it. And we might age, we might add numbers behind our name, we might even get some gray hair, but our behavior doesn't change. Clearly doesn't change. And of course, I know you're going to say it's silly to compare kids and toys and adult men and politics. Maybe, but I still stand behind what I said. It's the same thing. It's the same thing, y'all. All right. So basically, they are looking and saying, hey, slow down China's economy. It could allow Mexico to attract more investments, lure companies, create jobs. And so they are getting ready to basically lure people over. And of course, I think that they're going to be coming closer to United States to say, at least we're close by. And you know what? Some U.S. will do it. I mean, I already talked about where I see some of the some of the plants going in partially in, like, maybe India, partially maybe Latin America or Mexico, partially in states. So I could see it sort of spread out at a few different locations to sort of become a bit better at managing the chain, the supply chain. So what they're saying is that uh, it gives us an opportunity, Mexico, more investment to arrive for companies to set up, for jobs to be created. And you can see the sort of, here's the China's growth, and this is I can't really go on it because every time I go on it, it shows me where it's coming from, which we already know that it's coming from Bloomberg. Thank you. Uh, so reliable GDP growth targets, and you will see the blue thing going on over here. I'm just gonna do it anyways, and that's sort of the actual growth rate, GDP growth target, right? And then this is what they're forecasting. So they're forecasting to go down, and it's very interesting to be able to watch it. So, they're saying, hey, we already have this deal between northern, the Canada, United States, and Mexico. Can we like do a little bit of business? Help a brother out. I want to make some money. So that's what's going on. And here we go. Germany. What's going on in Germany? I know I kind of jumped. I went from Europe, jumped to Americas. Now I'm going back to Europe. Sorry. But look, y'all, the flights, the planes, the airlines could use our travel across the pond. So maybe I'm trying to virtually help them out by, going from country to country. I don't know if anybody works for these companies. Let me know. Did it work? Um, so Germany to own 20% of Lufthansa as part of $9.8 billion rescue. So, if you know anything about Germany, you know that Lufthansa is one of their airline companies, and it's one of the actually premier airline companies in all of Europe. It has been for a very long time. I would argue it still is. I mean, I haven't lived in Europe in over 20 years, but I tend to go visit rather often when I can, of course. And so. Uh, it is one of the airlines that people really, I mean, when you fly it, you definitely can feel the difference between Lufthansa and Wizz Air. Nothing against Wizz Air. I mean, they're built to be the economy thing. It's sort of like, flying in style, and flying with like Spirit Airlines here in the United States. It's not the same thing. Even the seats are not made the same. So but anyways, so Germany threw Lufthansa 9 billion euros, or almost $10 billion lifeline on Monday, agreeing to bail out the company, which gives Berlin a veto power in the event of hostile bid for the airline. As part of the largest Germany corporate rescue since the coronavirus crisis struck, the government will take a 20% stake, which could rise to 25% plus one share in the event of a takeover attempt, as it seeks to protect thousands of jobs. So this is an interesting piece, right? Like partially kind of nationalized it, right? But they're also saying like, we see carnage coming. We see people coming in and buying this thing, hostile takes over, because you can buy stocks now for airlines for like dirt cheap. And there's some problems with the airline industry as far as like the cost to operate and all these different things. And I think Warren Buffett has done a spectacular job explaining what the problems are with airline companies and why he basically dumped them. And years ago he talked about the airline companies not being good for investments. I mean, I remember 10, 15, 20 years ago he was talking about it. So um, but if you're already in the business and maybe you have some cash, or maybe you borrowed some cash, or maybe your country gave you a little bit of cash underneath the table, you know what I'm saying? You have ability then to buy some of these stocks for pennies on the dollar, because all of them have crashed severely, and acquire massive amounts where you can actually get majority share. And now you begin hostile takeover. And so they're saying, no, 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 no. We're going to own this stuff as a country, and we're going to protect this. So it's very interesting. But, Germany's central government has spent decades offloading stakes in companies, but remains a large stakeholder in former state monopolies such as Deutsche Post and Deutsche Telekom, which is basically the post service and, of course, the phone service. Duh. Simple enough. Berlin also still has 15% holding in Commerzbank, which it took on during the global financial crisis. That was the 2008 crisis, not the 2020 crisis. So you gotta think through all the different crises. Other airlines, including KLM. Sorry, I switch back to different language when I do this. In United States carriers have also sought state aid after the coronavirus hit the global travel. So uh, the Germany's finance ministry, economic affairs ministry, said on Monday that Lufthansa, whose shares closed up 7.5% at 8.64 euros or $9.42, had been operational, healthy, and profitable with good prospects, but had run into trouble because of the pandemic. The support that we are preparing here is for a limited time period. Okay, limited time period, said the finance minister Olaf Scholz, uh, of the deal under which Germany is buying new shares at the nominal value of 2.6 euros, or $2.79. Okay, so it's very interesting that they are kind of doing that stuff, and you can see the biggest bailout yet. You can see everything that was bailed out, and who got the most aid and what's going on with that. And as you can see, Lufthansa is definitely a winner, but Adidas is right there. And some of these things you might recognize, some you don't. I don't recognize all of it. ThyssenKrupp it's sort of like a version of GE in Germany. Puma, of course, is the athletics, and Condor. Oh my gosh, I used to know what it is, but I'm not going to make it up now because I can't remember. So that's an interesting piece that is going on. More bailouts or more debt, European leaders' difficult decisions. So we've already covered yesterday that there's a lot of key decisions about how to finance Europe and what's going on. And as you can see, there's still a lot of challenges of what's going on. So Europe's leaders may be united on the need to throw money at economies during the coronavirus crisis. However, they are yet to figure out the way how to pay for it all. So that reckoning could force governments across the region into tough choices about where to lay the burden among voters already disillusioned with political establishments, a decade after the global financial crisis presented them with previous bills to settle. So as you can see, it's not easy, right? You want to do the right thing. You want to try to get everybody around the table to agree. Everybody's looking at their own country and their own people, and the people are looking at the leaders and saying, go ahead, I dare you, go ahead, borrow more money, because I'm already suffering already, right? So Europe's austerity experiments since then, from Greece to UK, provide cautionary tales of either the economic damage or electoral fatigue that spending cuts can cause. So yeah, I mean, we talked about previous day that Greece has experienced huge austerity measures and problems and all kinds of stuff, and that potentially could be coming to, a country near you, as they say, from Spain to Italy, possibly even France. I mean, who knows? Ireland, it could go deep and wide when, there's too much going on. And then you then depend on IMF to step in and do stuff. So what they're basically saying is that they're trying to borrow up, and as European government rapidly ramp up borrowing to aid economies, the region's experience with austerity is framing the debate how to tackle the debt. Applying such medicine too forcefully in Greece in 2010 led to International Monetary Fund to conclude that it had caused more harm than good to public finances and growth. And, interesting, right? That we've already covered that stuff. That, you know what I mean? Like, sometimes the medicine is more painful than the disease itself. And so you got to be very, very careful with these things. That is good, but that can also be bad. It's just sort of expands on what currently is. It magnifies it. That's really what it is. In the UK, whose 2010 deficit is also ballooned to a Greek-like level, austerity under former Prime Minister David Cameron coincided with years or negligible growth. Whether or not that followed from spending cuts or it did fuel discontent that contributed to its political demise when the country voted to leave the European Union. So it's one of those things that it's a real fear of how to go about it. German Chancellor Angela Merkel has already been forced to deny any plans for higher taxes for now, while French Finance Minister Bruno Le Maire said he doesn't want to reapply the country's levy on wealth. Athey says such reactions are understandable. So, how do you pay for it? Do you raise taxes? But they're saying, I don't know how we feel about that. And they're afraid to say anything now because if you say we're going to borrow money and we're going to raise taxes, people might not like it. But at some point, they might have to. And here's the reality. Europe has high taxes, y'all. Very, very high taxes. And, I think that there's going to have to be a different way to pay for all of this stuff. And this is the reason why I keep saying there's going to have to be a debt jubilee. A debt jubilee for people, for companies, for countries, clean slate around the world. Let's start over and, see how much better we do or don't do over time. Quite a few years back, quite a few centuries back, you would have a different king would show up. And whenever a different king shows up, to a throne, he would typically start, and I say he because he was typically a king, he would typically sort of start fresh his kingdom by declaring debt jubilee, which basically allowed for the people to sort of wipe out all the debts. Then he would become a favorite king, and then we could continue with the taxes and debts and all of that stuff. So that's where the jubilee is really kind of coming from, and that's where one of the things to kind of to say, it's not unheard of to note that people have, been done this before, right? So that's just something to think through. All right, so here we go. TechCrunch. Uh, Uber cut 600 jobs in India. We covered Uber, last week? Where they were cutting jobs. Now they're cutting even more. So 25% of its workforce in India is gone. And they already have cut. And right over here, it didn't allow me to highlight today for some reason. So now I have to try to find it. But, Uber already had cut quite a bit of jobs. I want to say 30 some percent. So an almost part of the world, food delivery startup Swiggy and Zomato have together eliminated about 2,600 jobs, as many of their existing customers attempt to avoid exposure to the world. So as you can see, there's people. There we go. Uber's announcement follows the similar cost-cutting measures enforced by its local rival Ola, which eliminated 1,400 jobs or 35% of its workforce last week. So it's one of those things that they're cutting jobs. And, Uber has cut jobs in the United States. I mean, they have cut jobs all over the world. Wherever they are located, jobs are being cut because, they don't need it. They don't need it. And I think Uber is going to change completely of how they work and what they do stuff. Very briefly, let's cover coronavirus may cost US $4.5 billion because of international student decline. And so this is one of those things that is interesting for higher education. Higher education is reporting that they're not receiving as many international students since some of the challenges have been happening with immigration, some things being stopped, some talks about, potentially disliking people from particular countries or particular religions and all of that stuff. Right, wrong, indifferent, it doesn't really matter. People are not coming. And now with the new virus, where you can't even get visa, you can't even travel, and people are afraid, genuinely afraid of getting stuck wherever they are. And what happens then, right? Say you come to the college and you get stuck, and now you have to stay at the college, or if the college says, you know what, we're closing doors, you got to go. Where do you stay? Do you try to go home, get stuck at the airport, and kind of get stuck in no man's land because you're in transit, so you can't get to the country and you can't get home and you're really stuck? Those are really scary things. And we've already seen that happening now with this pandemic. So, potentially we could see that again. And so what we're saying is that so far, the U.S. has potentially lost nearly $1 billion from shortened or canceled study abroad programs, where international students, scholars, faculty, and staff have traditionally spent around $638 million. Moreover, the education nonprofit estimates that colleges will lose at least $3 billion for fall 2020 from the decreased enrollment of international students who typically pay full tuition. Domestic students, you could say, oh, education is expensive, but domestic students, they get aid, they get grants, they get all these different things. Vast majority of international, you got to pay cash, okay? And you got to prove that you can pay before they even let you come into the country. Ask me how I know that. So, it's not that easy. It's not that simple. And so what they're saying is that 77% of employed international scholars indicate they would need ongoing support employment during the crisis. 41% of respondents reported experiencing negative financial impact, such as loss of grants and contracts, compensation, and shifts to online instruction. How do you travel abroad online? I mean, we just did it. We've been traveling the world here, but you know what I mean. And I'm being silly over here. So what they're saying is that not only will they lose billions of dollars, but a lot of Americans, tens of thousands of people will lose jobs because why keep them on the payroll, right? Like, think about it. If you are a school, and you have people that focus with international population and travel abroad and all of that stuff, but if all of that is cut, all of that is non-existing, why are you keeping those people on the payroll? You gotta lay them off or furlough or whatever it is until things can kind of pick up, right? So it makes perfect sense to me of what's going on. All right, well, let's continue with our travel, and we're going back to Singapore. Have we been to Singapore yet? No, we were in India yesterday. We visited China maybe a little bit, or talked about China, but now we're going to Singapore. So Singapore could contract 7%, okay? 7%. As you know, Singapore is one of the stronger economies around the world, and, it has always been known as a very good, very strong place to sort of live, work, make living, and so on. But they are facing its worst contraction since independence more than half century ago, okay? So 50 years, they've been doing pretty darn well, a little bit less than that. The government expects gross domestic product to shrink 4 to 7% this year, down from previous forecast of 1 to 4% contraction. So they are looking at the stuff, and they have been doing. So here is their GDP uh, sort of chart of kind of how it grows and contracts. As you can see, back in 2008 and 9, they contracted, but it looks like it was a bit worse than what they're predicting to kind of happen right now. I mean, the way that I see this, let me see if I can zoom in. because I keep trying to get closer to the screen, but that's not really helping, is it? Um, yeah, there we go. Thank you, Zoominator. Um, okay, so you can see, yeah, it's hitting right around 10%. This guy over here in late 2020, so that looks like it was what? Fourth quarter of 2020? Is that how it's divided? Yeah, it looks like it. It's kind of hard to see. uh, was more than negative 10%. So we've seen Singapore kind of go back and forth, but you can see that it's been sort of like slowing down because this drop came from this giant boom. But since then, you can kind of see it's been slowing down. And then, it's been sort of even late 2018, 2019 was like, kind of up, kind of down, kind of up, kind of down. And now they're expecting this. And, part of me thinks, is it going to be even worse? Is it going to be even worse? Because, things are, this was painful, but you came from good economy. This, you have a super low economy and it's going to go down. So it will definitely be interesting to see. The downgrade in Singapore's growth outlook was despite an improvement in first quarter GDP, which declined an annualized 4.7 from previous 3 months, far better than the 10.6 drop estimated earlier. That was mainly due to growth of pharmaceutical manufacturing, which helped offset the slump in electronics. So this is one of those things that just like a country cannot depend, and I think countries and leaders are learning this quickly, just like countries cannot depend on one industry to make all of their money, like oil or manufacturing of textiles or manufacturing of electronics and that kind of stuff. We cannot depend on one source of income from one industry. You got to diversify, not just in sort of your holdings in your portfolio, but you got to diversify in the incomes and types of incomes that you're receiving. So you want as many as possible from as diverse group as possible. And so you don't want to just be in real estate, right? Real estate is part of it. And if you hold real estate, you don't want to just have it all in one area. You want to spread it out in different markets and have different types so that if one thing kind of dries up, you still have something else coming in. You want to have as many sources of income as humanly possible, okay? So, and you want to invest in all these different things. And I think countries are learning that as well. And, it's something that we can all learn right here at onedealaway.com/live. That's right, I'm promoting it because it's important for me to get as many people in my particular platform, my particular network. And, it's important for me that people are doing well. All right, so let's finish up with with this stuff. So what Bloomberg economists say. The new growth forecast likely reflect expectation the easing of the lockdown to contain the virus needs to be much more gradual, hamstring economy for most of the year. So, they're basically saying that, yeah, we agree. Hank said Tuesday a stimulus package will focus on job skills training. He already delivered more than 60 billion Singapore dollars, which is 42 billion US dollars, fiscal support to help cushion the blow for businesses and households. So, the dollar is up against the US dollar. Okay. And that's basically it. That's it. That's it. That's kind of what's going on in the world and in the economy. I hope you have enjoyed this. I hope you will join me tomorrow at 7 a.m. at onedealaway.com/live. Because, I want to be able to chat with you and talk about things, answer questions that you have. But of course, if you're watching this on YouTube or elsewhere, thank you for watching. Anyways, I hope you have enjoyed it, that you have learned something new, and that you will subscribe, give me a like, share it, and, again, join me tomorrow at onedealaway.com. And that way we can hang out and learn, much better and much faster. You want to do this in the morning so you have time to act and react. And one of the things that I want to mention is that I am doing a free, this is sort of a plug, but I'm doing a free intro course in Crypto 101. If you're interested, let me know. So you got to come to onedealaway.com. And if you want to come in and check out, you will find it under the products. Tomorrow I will actually share with you the link of where you can do that stuff. So if you want to join me for a free live course, on how to get into crypto and the basics, like not technology stuff, nothing like that. There's just really for people who have never done anything with crypto, don't understand and just want to learn the basic stuff. Join me live, do it that free, and I'm excited to be able to do it. All right, y'all. Thanks for watching. I yapped way too much. It's time for me to go and finish my coffee. Have a great day. Have an amazing morning. Until tomorrow, stay forever money blessed. And to remember, you are only one deal away. Bye, y'all.